this webinar, whether through Zoom or YouTube. Today, our session will shed light on the opportunities and the challenges of the digital banking industry. While the primary function of a banking may not have been changed over the past 200 years, the methods of performing these services have transformed dramatically. The early banking system were all about paper and locality, while the 21st century information age caused the banking industry to shift toward data and networks. What have remained constant since the banking industry began in the 90s and 80s are the customer needs. Banking customers want to be sure that they can access their money easily and quickly all the time. They also want some form of a relationship with their bank. They need trust and personalization, which in the early days meant face-to-face interaction with their bankers. Fast forward to 2021, and a global pandemic has accelerated digital banking and forced banks to evolve at an exponential speed to create more effective and efficient ways to meet their customer needs. After this short entry, therefore, I'm welcoming you all to this webinar, in which we are all trying today to focus on the industry of digital banking from the start, the performance, and how did the customers see this rapidly growing industry? And do people now prefer to use digital products rather than paper-based and face-to-face collaboration opportunities and the challenges? Through this webinar, we will also focus on the Islamic digital banking, the growth, solutions, Sharia challenges, accommodating the international needs, innovation of new products of Islamic banks. At this point, let me welcome our distinguished speakers, Dr. Ahmed Darwish, the head of digital delivery at Bank al-Bilad, and he is the owner of Rashiq, the agile digital delivery approach, with over 28 years of experience working for IBM, Fuji, Siemens, Al-Rajhi, and others. Welcome, Dr. Ahmed, with us.
Thank you so much, Ibrahim.
Mr. Ahmed Naimi, the head of the Center for Digital Transformation and Project Management at Al Bahrain Institute of Banking, Finance. He has over 23 years of experience in IT and digital management, as well as a wide professional knowledge in the applicability of online experience into the real world. Welcome with us, Mr. Ahmed.
Thank you so much. Great to be here.
Thank you. Dr. Farrukh Habib, the co-founder of Alipay Technologies in Dubai and Sharia expert in London. He is an expert in fintech, finance, and Sharia. He is an advisor, consultant, and product developer with a vast global experience of more than 8 years. He has also developed his own Sharia compliance screening for crypto assets. Welcome, Dr. Farrukh.
Jazakallah khaira. Thank you so much. It's a pleasure.
Thank you. Dr. Mohammad Shahid Khan, the co-founder and CEO of Poincentive, new digital fintech, with over 20 years of diverse track record of achievements in the financial services industry. He is an expert in Islamic finance, innovation, change and transformation, strategy formulation and execution, and tech solutions. He successfully launched several Islamic banks business in the UK, Bahrain, and other countries. He was part of the core team that launched the GCC region's first digital Islamic bank. Welcome with us, Dr. Mohammad.
Pleasure's all mine. Thank you.
Thank you very much. Thank you all for joining us today. Before starting this wonderful webinar, for all people attending, please submit your comments and questions to be shared with our panelists. Starting with you, Dr. Ahmed Darwish. Welcome to this webinar, and I hope you are all doing great and fine and keep safe. We have recently heard a lot of expressions such as digital banking, e-banking, internet banking, and online banking, and others. Would you please talk to us about what are the digital banks, And what is the digital evolution on the banking sector by reflecting it into real experiences and supporting it with some statistics.
Sure. Thank you so much, Ibrahim, for this introduction. Please allow me to share my screen first.
Yes, sure.
Can you see my screen now?
Yes, it is loading. Yes, now it is obvious.
Okay.
You can go ahead.
Assalamu alaikum and good afternoon, everybody. Welcome to this webinar where we are going to speak about digital banks and the way forward for digital banking industry in general. I will try in this presentation to share some of my experience in this domain of professional. And I will also present something about Rashiq, which is the operating model that we are trying to use and adopt across the region to make sure that we have a proper agile operating mode. Our agenda for today is we are going to talk about the game changers in digital banking. We are going to talk about diversified digital products and services in this domain, how to simplify these services and the opportunities and challenging facing banks and digital banks in specific, as well as one section for Rashiq as a process and operating model for digital delivery. I don't know if this part is covering the screen. Can I hide this?
Which one?
You don't see this panel, huh? It's only on my screen, maybe.
Yes, I
okay.
think, yeah.
Okay, so here we are talking about the disruptive technologies that we have in banking, our digital banking, and for sure it's covering other industries as well. So if we are talking about telecom, about education, so some of these disruptive technologies now are commonly used and adopted across the world. The word disruptives mean that this technology, when it comes, it overcome and supersede the existing technologies, and it gives us opportunities to start adopting new solutions and new services for our customers. So we are talking about, for example, open banking is one of these new technologies where we can start serving our customers through third parties. We have also open APIs where we can serve the customers of our customers through API services, where the bank is going to be the back end for these service providers, like what you know today about what you hear about fintech companies. A lot you can see here in this slide, and all these disruptive technologies are helping us today to provide new services and change the game in the banking industry towards fully digitalizing the services and products to our customers. One of the statistics that we have from COVID-19 as a game changer, and we all noticed that COVID-19 during the last couple of years has made a lot of impact on digital banking industry and digitalization in general across the world. As per these statistics, where 360 people votes, we have asked them what was the impact of COVID-19 on the digitalization of your banking services or banking services in general. I think 61% here are accepting and answering that it is greatly increasing the digitalization, and 30% are saying it is increasing the digitalization. So all in all, we are talking about 91% of the people who are voting or who have voted for this questionnaire agreed that the COVID-19 was an added value, despite a negative aspect of it. But in terms of digitalization, it pushed a lot of organizations and especially banking industry to go for digitalization. which was a benefit for us in digital banking to get support from everywhere and to get further and more budget and resources to digitalize the services and products that we are providing for our customers. Another statistical view was also from a survey data conducted also in 2020 about the impact on Saudi banks in specific. And we get to know that 56% of the people has mentioned that we have a decrease in the revenue, and 22% has mentioned that they had got some increase in the revenue because of COVID-19. However, I believe that this statistics, if we repeat it now this year, will start getting a different view. For the decrease or increase on the OPEX or operation cost, 38% mentioned that there was a decrease, and almost the same ratio has mentioned that there was an increase in their operation cost. The credit risk is one of the most impacted areas, as well as the productivity, because of the COVID-19. So the risk increased by almost 50%, and the productivity also were decreased by 31%. However, some people, because of working from home, they say that our productivity actually get increased by almost 52%. So yeah, as you can see that there is a dramatic change in the revenue, in the credit risk, and the productivity of the organizations during this COVID-19 as a game changer across the world. Moving to the next, digital banks, as you know, are now becoming a disruptive business, which is now seen as either a threat or an opportunity for banks or classical banks who are working there for almost 200 years. And for sure, in Arabic countries, we have banks who are there for almost now 150 years or more. So starting from 2014, where NEEM in KSA started being a digital bank, you don't have branches, you don't go to the branch to see people, you just open your account online. Also in 2015, Monzo in UK has also started providing digital services. Lev KSA in 2018. This year we got an approval from SAMA and the cabinet of Saudi Arabia to officially launch two banks, and with a capital of 4 billion Saudi riyal, which is one of the competitive budget for established organization or a working capital of newly established organization. We have just heard yesterday, and this is very new to all of us, that there will be an international Islamic digital bank will be officially launched in Q1 2022 with a capital of 200 million US dollar. And this tells you that there is a clear direction and there is a disruption in the market and banking industry toward fully digital or digitalized banks without having branches or what we called new banks. So these new banks are going to provide this diversified portfolio of products and services, and not only for these digital banks, also for classical banks who are going for digital transformation. So we are talking about accounts opening. I believe that even classical banks like Bank Al Bilad was the first, maybe in Saudi Arabia or Middle East even, to having account opening fully digitalized online. Within 5 minutes, you can open your account without the need to visit a branch. And this is today is available for different segments, for retail segment, for SME, and for Injaz, which is the remittance arm of the bank. Financing, and you know about personal finance, home financing, auto lease financing, all these services plus trade financing are now being offered digitally. Cards, remittance, instant payments, bill payments, personal finance management, where the customer can start managing his transactions and can see his expenditure, and he can get a clue about where he spends his money, and he can control or start controlling his, let's say, lifestyle to match what his plans are in order to meet whatever objectives or financial objectives in his career. For sure, after sales services are also occupying a good portion of these services, and people who are today getting the services from our digital banks, they are expecting also some after sales services to be there. Otherwise, as you know, that there are no branches for these banks, or minimizing the number of outlets or service points. So customers should expect to get after sales services also online without the need to visit a branch or any place.
Yes.
For sure, simplicity is the main message or outcome of being working digital. However, it varies from one industry to another. It varies from one organization to another, and how you position yourself in the market with a simple, fully digital, with minimizing the friction with the application. Customers can start getting attached to you. They are start getting engaged, and you can retain these customers for a long time. Today, for sure, with the existing infrastructure that we have in a lot of countries now across the world, not only in the Islamic countries, is helping us a lot today to start having fully digitalized journey. Like, for example, Abshir in Saudi Arabia, where customers can sign on and enter their username and passwords to authenticate the transaction and also account opening. So there is no need anymore for physical visit to the branch to make sure that you are an existing person and show your identity to the employee of the branch. Some prerequisites even are becoming easier, so you don't have to fill 200 pages of application forms and manually like it was happening before. Now it's fully digitalized. Through 10 to 15 maximum steps, you can have the account opened and you are done, and you can start even using your virtual card without having even to have a physical card like what we have today in Apple Pay, for example. Minimizing the friction means that you have to make the customer journey as simple as possible, so there will be no friction between the customer and the mobile application. And the last point, which is now becoming a trend, is that the mobile applications of the digital banks are becoming not only for financial purposes, but is becoming a lifestyle application, where from within the application you can do a lot of things, and you can get things done for your purchases, for your actually day-to-day activities, visiting branches, visiting restaurants, and getting a lot of services from your banks. The second point here we are talking about are the opportunities that these digital banks are getting. The first opportunity is the serving the millennials. This generation is tech savvy. They are fully utilizing their mobile phones and tablets. You never saw those people sitting in front of a PC like it was before. So all their life are attached to a mobile device where all digital services can be presented. The existence of disruptive technologies that I have explained at the early time of or early stage of this presentation are also there, helping us to digitalize and have more services and products available online to our customers. The diffusion of the mobile, which happened during the last, let's say, couple of years, and especially for example, in Saudi Arabia, we have an application called Tawakkalna, where you have to have your medical status shown to any enterprise or any building that you want to enter, has enforced a lot of people, and almost all people now in Saudi Arabia are handling a smartphone, not the traditional or the classical old one. So now you can start getting those people using these services and start acquiring them to becoming your customers. For sure, there is no need now for a high working capital like it was before. So you can open a bank, and we have seen this International Islamic Bank is going to start with only 200 million US dollar, which is for sure, as you know, is very low working capital for an organization working in banking. It's not like anymore it was before, where we have to start with billions and billions of US dollar. New banks, or what we call branchless banks, are now becoming a trend. So you shouldn't expect in the future to have a lot of branches in the street. You should expect those banks to be operating from the online. There is no need for having branches across the country to make sure that they are serving customers. And as I mentioned earlier, the after-sales services provided by these banks will going to make this happen without the need to visit the branches. The first and the good opportunity that starts shown to these small and entrepreneurship organizations, that they can cross borders without the need to be a big name or a big organization like it was before. Yani big banks or international banks before, they have to be operating in multiple countries, and they have to have a lot of investment to exist in these countries. This is not going to happen anymore. You can open an account with a bank in some other countries if it allows that, the regulation for sure, and without have to be there physically. So you start also as a digital bank, be able to provide your services to multiple countries, and you can increase your customer segment by approaching new solutions or new services that can be utilized across the world. And for sure, you have a lot of examples today about, for example, Apple Pay, which is reaching all of us across the world. SME is a big segment of customers, which in Saudi Arabia, for example, is presenting 20% of the GDP of the country, and there is a vision of 2030 to reach 35% of the GDP, or to present 35% of the GDP, which is going to increase the share or the importance of this segment, which is going to, as Dr. Ahmed Darwish in Egypt always mentioned, that SME is always the motive and the motor and the gear of the economy in any country. However, there are a lot of challenges also facing these digital banks. The first and important challenge is the customer trust and engagement. Some people are still don't trust virtual organizations or organizations who are not physically present in their front or in the streets. So we still have this obstacle. However, by time, this is, I can see, is becoming a little bit relieved, and people start trusting digital services. Competition between these banks and others, like, for example, small fintech companies. A small fintech company can start providing one service out of the portfolio I've explained earlier. So they can start competing with these banks, and maybe even better, giving better services and getting more customers in shorter time. Regulation, AML, is also important aspects, because they are still having a lot of aspects to cover before they officially launch their services in any country. Because of these two aspects, especially the money laundering is one of the key aspects and the most challenging point for digital banks. And I can tell you a lot about this point from what we have seen during the last couple of years in order to be able to support fintech companies and even to go digital. The technology and the roadmap of the company or the bank is also very important. You have to have your own roadmap. You have to have a strategy of what to present to the customers and how to make it different or differentiate yourself from the competitors in order to be able to grab and acquire or have more acquisition of customers and retain them along the journey of the bank, to make sure that whomever is joining your bank is also continuously using the services and making a revenue earning for you. The last 2 points, which are going to be the subject of the next section of this presentation, are digitalizing things need you to be faster in the market. So you have to adopt agility, and you have to have a fast, trusted, and mature operating model, which we are going to show to you today from what we call Rashiq, which is the Agile Delivery Management Process and Operating Model I have developed in 2019 and continuously under development to help organizations to go for digital transformation and providing digital services to their customers. However, it's an agile management process for any delivery on any organization, and operating model for any organization can adopt without being specifically a digital transformation organization. However, as we might know that majority of the organization across the world are going through digital transformation, so their digital transformation journey within the organization, even if it's not to provide services outside to the customers, is also covered under Rashiq.
Excuse me, Mohammad, we have 2 minutes left to allow other panelist speakers, please.
Sure. Rashiq was established in 2019 to solve major pain points of the delivery. It's based on disciplined agile management process. It is Scrum based, so we capitalize on the Scrum methodology underneath of the disciplined agile delivery process. It's a streamlined, scalable, measurable, and sustainable, which are the most important factors for any organization to go with when they are selecting their operating model. طبعا for sure we all knows about the major pain points for delivery, especially the waterfall model, which all IT people across the world are still following or they used to follow, and some of them moved to agile. However, still dominating the industry. There is some lack of focus and reprioritizations, lack of rewarding system, capacity planning, development of the resources, missing SLA with external parties, as well as unclear or inadequate KPIs. So Rashiq is objecting or has the objective to be in line with the strategic objectives and solve these problems to maximize the business value and provide an effective operating model for the organization. Disciplined agile approach is based on Scrum, as we explained. It starts with agile delivery, then it goes to being a DevOps organization, then the whole IT within the organization to be a disciplined entity, then the whole organization should go agile and becoming an agile enterprise. This is the Scrum process, which I don't have to go through it. However, the main 4 stages of Rashiq starts from having an idea, innovative idea to adopt in your organization. So you have to do some brainstorming, elevator speeches, voting until you select the idea, and then you submit the idea and approve to get the capacity planning, budget approval for any planned or unplanned demands. And then you analyze, so you have to work in drops for the backlog and user stories. And then finally, you go and develop your application or your solution in sprints, as you know, in Agile. The delivery team is always composed of a Scrum Master plus a product owner working together with the technical team and interfacing with the product management team and the business and operation teams in order to ensure the delivery. This is an example of the team working with a competency center to make sure that they deliver the portfolio of the projects, number 1, number 2, number 3, in synchronization between these teams together to make sure that we deliver our projects successfully. Escalation matrix is also one of the most important aspects of any operating model to make sure that you are working in a proper way. Any delays from any partner or any division should be also escalated to make sure that we are getting things done in agile approach, no delays, so we can hit the market and have minimum time to market. That was the last topic that to talk about KPIs, that we have to set proper and adequate KPIs to make sure that we are measuring ourselves, continuously improving ourselves, and we have to deliver things year to year in a better manner, inshallah. Thank you so much for listening. And now I'm open to questions if Ibrahim want to provide any.
Actually, we are making some time for questions and answers, so
Okay.
we can move the questions to this time, inshallah.
Inshallah.
Now we will move to be with Dr. Ahmed Naimi. But before that, we'd like to thank you, Dr. Ahmed, for this precious presentation. Actually, it's really a way forward to know the experience of Rashiq and the how it would help the market to develop and optimize the customer needs, actually. So now let's move to you, Dr. Ahmed Naimi, and welcome again. How are you doing today?
Thank you so much for having me on board, dear. I would like to start actually by thanking the Islamic Chamber of Commerce, Industry and Agriculture for hosting this session today and inviting me on board. Just give me a second. I'm just adjusting the screen so that I can see all the elements for the presentation.
Okay. So let me give an entry about your speech.
Sure.
So our audience can know that. So as a customer, I have been pushed forward to adapt digitalization progress and banking sector transformation to provide digital solutions. So how did COVID pandemic push people toward using the digital banking solutions? And what are the challenges of dealing with the digital banks, like security, mindset, environment, facility, utilities, and skills? Please.
Thank you. It's just I cannot see the videos of the individuals. I don't see you guys anymore after I share my screen. But anyways, I'll just pass it along. It's fine. Great. So let's start with my presentation. Bear in mind that I don't see anyone. It's just that I see my screen, the presentation. Basically, just to talk about the BIBF, the Bahrain Institute of Banking, just for a few minutes, just before we jump into the topic itself. The BIBF has been in the market for the Bahrain Institute of Banking and Finance, have been in the market for around 40 years so far. And we are governed and affiliated under the Central Bank of Bahrain. Now, it's a training institute, but it's a not-for-profit training institute. We actually trained since our inception around 360,000 students, and talking about specialized training programs, vocational training, professional qualifications, all those sort of trainings that these students have gone through. We do sort of international training, so we are a global institute, not local. So we serve 64 countries worldwide, which a lot of people don't know. We have specialized programs every year. We put to the market around 600 plus programs, whether professional qualifications, short courses, competency-based, skill-based, whatever it is that the market actually requires, depending on the year we serve. We have sort of a global trust, so we have the World Bank with us, we have Amazon Web Services, Islamic Development Bank, among many, many tons other trusted partners that work with us full-fledged. Now, this is basically the global footprint that we have and where we deliver training. Either our trainers fly out to those countries, or we get delegations coming to Bahrain and taking specific programs. We actually have been in our existing building where we are for around 25 years, so it's become a bit old, yet it's fully maintained. Yet we have actually are moving to a new premise, inshallah, by October this year, a 10-story building, seafront, state-of-the-art building, where we want to deliver training on a new scale sort of thing. This is just a look in terms of the facilities that we are actually going to offer from this new premise. The learning centers we have a banking and finance, which focuses on all elements of banking, finance elements, Islamic finance and all its elements, digital transformation project management, where we look at all those digital banks and digital elements that are coming on board that serve the banking sector, insurance, leadership and management with all the soft skills, the HR, marketing, and all these sort of programs. And we have another arm in the BRBF, which is the academic studies, where we look at how we can actually develop those newcomers to the banking sector through academic programs. This is a bit about the BRBF. I don't want to dwell a lot about it. I don't want to take the subject sideways. But if we talk about digital banking, the way forward, I want to add an element to it where I'm going to focus mostly on the human capital or the generations perspective of digital banking. So looking at digital banking from the outside and looking at digital banking from within the organizations.
Yes.
I like to start with one quote, which is, the world is changing very fast. Big will not beat small anymore. It will be the fast beating the slow. I really like this quote. It's and we've actually seen it and we are experiencing it with the new startups that are coming on board, fintechs are coming on board, and they are actually disrupting the work of major banks and major organizations in the world. So small company coming on board, but implementing an agile perspective, creative solutions that are shaking up all those major banks and financial institutions in the world. Let's look at this slide. And I want to focus on this slide. We have a sort of a 3 career timelines. Let me explain these career timelines to you and link it with the topic that we have today. As you can see from the first career timeline, the past. Careers were sort of stable. I'm talking about the my parents' days, for example. So yeah. Careers were stable, linear, and singular for most individuals in the past. So the career equated to an educational degree to some extent throughout the individual life, and individual didn't focus much on additional training. This generation of individuals are being affected the most with the current technological advancements, and they're called digital immigrants, the Generation X. So they go to school, they find a job, and that's the same job they stay with until they retire. So there is little for them to actually move and study more or reskill themselves. So when we speak about banking, this generation expects to speak to someone at the branch. So it's very important for you to actually understand the generations, for you to actually know the expectations of the digital banks. So this generation expects to speak to someone at the branch, have a face-to-face discussion, transact on the interactive voice response system or call system. This is the generation's expectations. Now, on the other hand, when we look at the second generation, which is Generation Y, which is the past and present generation. I'm talking about my generation. This generation has some sort of a career stability, yet the individual goes and studies further, may change careers a few times, and gets reskilled. Those individuals have come during a time of technological change. They are sophisticated, technology-wise, they use gadgets, and as such, these individuals are called the digital natives. Adaptation of technology and reskilling is much easier than a digital immigrant. So digital native is much easier to adapt all these technologies than a digital immigrant. And they are the known as Generation Y. The expectations of this generation is the use of digital means for their banking transactions, but at the same time, they expect for a complicated transaction to speak to an individual. So they need a branch presence and a face-to-face interaction. However, they are easier at adapting technology than digital migrants. On the other hand, we have the Generation Z. So this timeline, the last timeline, which is, I'm calling it present and future, which is our kids. This timeline is more fragmented. They tend to look at projects, different jobs, they change and jump around, move and feel, move until they actually feel content about what they do. The careers in this time are complex, they are specialized, they're collaborative, they're evolving. the work life is made up of portfolio of micro careers. So they don't stick to one job. They don't have that loyalty that we or our parents have to certain jobs. So they move around jobs depending on where they feel comfortable with. They are called the technoholics and the digital integrators. They have integrated technology seamlessly into their lives and have used it from the youngest age. It is almost like the air that they breathe. So this generation are the easiest to reskill for tomorrow's job market. And they are the easiest to use digital banking to its fullest extent. They actually do not like face-to-face interaction. They like chat to get their transaction done. They'll enjoy all the facilities provided them in digital banking platform. They look for digital banks that gives them a full digital solution to their needs, whether it be a transactional or a lifestyle, like my colleague Dr. Ahmed just earlier said. They want applications that give them a full lifestyle solution, like booking their tickets, saving up for a certain thing that they want to purchase, be it PlayStation or whatever it is that they want to buy. They want to manage their transactions through that digital app and make it a lifestyle element. It is essential for us to know these differences in generations to be able to better tailor our digital banking experience. Without that knowledge of the target market, the experience that you want to develop may not be fit for your customers and may not lead to actually failure. And that's why I wanted to actually focus on that before I move on to the other slides. It's important for us to actually distinguish between digital immigrants, digital natives, and technoholics. Let's look at some examples of some bank experiences who they target in these generations. Am I so far okay, Ibrahim? I don't see any videos, so I'm just...
Yes, you are in line, Mr. Ahmed.
So let's look at Erica chatbot by Bank of America. As you all know, Bank of America is a very old bank, yet so their customers are mainly digital immigrants. What does that mean? Older generation. Yes, they go to the branch, they finish their transaction, they leave. They have a huge base of digital immigrants. Now, when Bank of America wanted to target the digital natives and technoholics, which is the younger generation, they came up with Erica, which is a chatbot. And what does this Erica does? Erica acts as a financial assistant, helping customers with common issues without the assistance of live operator. This drives down the personnel costs, and the AI-assisted self-service ensures a successful customer experience. Let me show you a video that highlights that for 1 minute.
Meet Erica, your virtual financial assistant in the Bank of America mobile app, here to help you bank. Erica can help you pay your bills anytime, from almost anywhere. If your debit card goes missing, Erica's got you covered.
I can't find my card. Oh, it's all good. I got it this time.
And with Erica, you can quickly send money to your friends.
I'll pay you back.
No matter where they bank.
Oh. It's been a while since we've had lunch together.
It hasn't been that long.
Need to find a past transaction? Erica makes it easy.
Erica, when was my last expense at the Lime truck?
Here's what I found. Your last transaction at the Lime truck was December 15th.
Way too long. No. Are you serious?
Erica, please unlock my debit card.
No problem. Your card is now unlocked and ready to use.
Meet Erica, your virtual financial assistant. Just talk, type, or tap, and Erica will help you with the rest. Open the Bank of America mobile. Meet Erica.
So this is basically Erica from Bank of America, where they targeted those digital natives and technoholics. Now, another example we're seeing with JP Morgan Chase. They targeted, they always had digital immigrants, but they wanted to actually onboard those digital immigrants and natives towards using technology. They want to move them to that level. So what they did the express branches by Chase. Whether they provided a sort of an experience, everyday express branches. It's not a branch, but yet it's sort of a digital advice bar where you go to, you have a video conferencing that connects customers with specialized staff. that helps them with complicated needs, but at the same time helps them in understanding these technology elements. So it's sort of a bar restaurant for their clients, where if they don't want to use their mobile, they can go there and use the digital means and understand how they can use it. So it gives them that face-to-face interaction somewhat. This is the look of the bar that they actually created. Canada Trust, which is TD Bank, let's say TD Bank is a Canadian bank. What they did, a beautiful thing that they did to target the technoholics and natives, is that they created a analytics platform. They used to have that since 2016, but what they did recently is that they attached that analytics with the chatbots, and they created a solution where it gives you a sort of when you set up your TD account, the MyTD, it gives you all your recent activities analyzed to initially determine both your overall monthly spending and spending in each category. So it gives you each month, after seeing your transactions, what you should do in order for you to save, what is your next purchase going to be, what is your next bill. All these elements are all embedded into their apps and gives you a detailed analytics about your spending and how you actually can save. PNC, on the other hand, this is the last example for this element. PNC, on the other hand, they did something to target the digital immigrants and keep and retain those customers, the digital immigrants and digital natives. Now, as we know, the older generation likes cash, and they like to have the cash in their hand. So they said, you know what? Yes, everything is going digital, yet we want to still retain those digital immigrants. And what they did is that they put ATMs where you as an individual can choose your bill. So if I want to have $1, I can have a $1 bill. If I want to have a $5 bill, I can have a $5 bill. So I choose the dollar amount or the amount that I want based on my needs. So it's not like the set value where you only get around $20 bill onwards. This is sort of a small example. I'll just fast forward it, where you can see he will enter just $1 in the ATM, and he will get an actual dollar bill. I'm just fast forwarding so that for the sake of time. So it doesn't give him $20 or $50 at one time. He can choose whatever currency, or I mean, whichever bill that works for him. So it created sort of an emotional connection with the customers by improving the customer experience.
Yes.
This is another example, which is called Zeal. They targeted everyone, digital immigrants, digital natives, and technoholics. But what they did beautiful in their application is that it's not a bank by itself. They built relation with all the banks in the US. So they have this application built within their applications of digital banking. Yes. So everybody can send payments to any friend that they want, regardless of the bank account that they have across the board. So they can send money to anyone using an email account. I have a video, but I'm not going to bother with it. You can check it out later on. Now, this is a generic question I want to ask the audience. What do these jobs have in common? If you look at this, if you can just type that in the, I don't even see the chat area, unfortunately. Now I see it. Can you just type in what do these jobs have in common? The digital transfer manager, data scientist, cloud computing specialist, social media curator in the chat. I'm not getting any response, so I'll just continue on. First and foremost, the common element between all those job titles, that these jobs did not exist 10 years ago. Okay, so old is not gold. So you should not live in the past. And not only that, these jobs, they are all based on technology. So they all have a sort of a tech element to them. As per the World Economic Forum report, the jobs of the future and the demand by 2025 is you're going to have what you see in front of you. The increasing demand is There are 10 jobs. The top 10 jobs are all sort of a tech related. Majority of them are tech related. Data analysis and scientists, AI and machine learning, big data specialists, digital marketing. So you understand where the digital banking or the banking sector is actually heading, and where those technoholics are actually building capability with the digital element. So a lot of focus on technology, and the decreasing demand are on data entry clerks, administrative, accounting, auditors. Those are declining because they're being replaced by the bots, by technology, by robots. Now, at the same time, the digital immigrants and those banks and all that, how they actually can retain their jobs by building a better digital capability. But at the same time, there are skills that are there to stay, like analytical thinking, complex problem solving, critical thinking, leadership and social influence. All those elements are actually required for the current job market in the financial sector or any other sector, be it.
I'm sorry, Mr. Ahmed, I hate to interrupt, but we have 2 minutes left.
Sure. So I'm not going to go further into this session. I'll just highlight certain elements about COVID. I'll pass the COVID elements. Okay. What should we do in order for us to actually embrace a digital transformation culture in an organization or in a bank? I have a lot to say, but I just fast forward at that. Some elements that we actually need to look at and come up and fix within our organization in order for us to have a better customer experience, a better employee engagement within the organization. One element is improve employee involvement and create a dialogue. So employees first and foremost need to understand the why behind digital change. No transformation can be successful without proper communication and shared plan. Employees need to feel that they are part of an organization and need to understand why certain decisions are being taken and to feel involved in these sort of decisions. The second element is build a culture with a startup mindset. So organizations should nowadays encourage employees to operate in a startup mindset and facilitate change and have a say in how a product is conceived and evolves over time. Third element, encourage collaboration. Organizations need to foster cross-functional teamwork. We need to break down silos so that digital transformation becomes a mindset throughout the organization and a common language internally. The fourth element is invest in training. The job market, as we see, we know it will change drastically. The skills needed are more towards digital skills, along with creative thinking, innovative mindset, analytical thinking, and whatnot. Embed digital skills within the employee roles. This entails developing a skill set in areas such as user experience, agile project management, agile thinking, and whatnot. Allow a culture of experimentation. Unfortunately, in this region, we don't have that culture. We find it very difficult in our region to do any sort of experimentation on trial and error. Allow experimentation in organization will promote a culture of innovation, creativity to support this digital transformation journey. And the last but not least is aim for digital mastery. What I mean by that is let's build capabilities that have a strong digital capability, but at the same time, a leadership capability where you have that upper right-hand box, digital masters, where it's excellent governance, excellent innovative culture, digital vision and strategy, rather than being the current conservative approach where strong leadership but low digital capabilities. Finally, again, reiterating the quote, the world is changing very fast. Big will not beat small anymore. It will be the fast beating the slow. Thank you so much, and I'm done.
Thank you, Mr. Ahmed. Actually, can't thank you enough for this fantastic presentation. You have traveled us through different experiences and discussed really fantastic topics that needs actually much time to discuss in special webinars and discussion table. But currently, let's move to discuss and focus on the Islamic banking by heading the phone to Dr. Farrukh Habib. I hope you are doing good today, Dr. Farrukh. And Thank you. With you, we are moving to focus on the Islamic digital banking and solutions. The Islamic banking is ever having its special characteristics due to some differentiating features. So let's talk about the growth of Islamic digital banking around the world and what are the Sharia challenges that may face Islamic banks in digitalization. You may reflect your personal experience in that too.
Okay, thank you so much. Let me just turn on my screen sharing.
Sure.
So I hope that you can see my screen now.
Yes, we are.
Okay,
thank you.
Perfect. So I'm going to talk about Islamic digital banking, and it's a very niche topic. It's because of the specificities and the niche specific characterization of Islamic banks, and then what digital transformation or digitalization means for the Islamic banks. So, but before that, let me just say something generally, although like respected previous speakers have already talked about it, touched upon the COVID-19 impact. But I think that it is important to know this, this situation and analyze it from the Islamic bank's perspective also, because it has a very huge impact also as not only on the conventional banking sector, but also for the Islamic banking sector. And so what we are seeing is basically we are in the COVID era where the health crisis have been transformed into pandemic, and the pandemic has led us to the economic crisis right now. So what we are seeing is like we have economic crisis, lockdowns, and then many sectors of the economy are either going down in losses or they are still recovering from their losses. So with this, what we have seen is that if you look at the normal household, this particular survey was being taken specifically in the UK. So if you look at the normal household income, that what happened to the normal household income and the financial circumstances, what we have seen is that most of the people who were basically earning lesser, for example, like in this survey, it was defined as less than £20,000 per annually. So what they have seen is that their income increased was very small, rather than their income decreased so much during the pandemic time. And then the savings also decreased with a huge margin. Like most of them basically lost 30% of the savings. And then, but it oppositely, what happened is like people who are earning and doing well during that pandemic time, for example, if their salary was more than £100,000 annually, their savings increased with 52%. And then what we have seen is like debts also decreased. I think it's because of the decreased spending behavior also during the pandemic time. Mostly people were not able to go to shopping malls, for example, so that they were confined to only groceries, something like this. So because of that, the positive point was that their debt also decreased, but not to the extent of their savings. Spending again, what happened is spending actually not increased, but rather decreased because of the lockdown and economic downturn. So people basically tended to save more. But again, the problem was that like the people who were doing well were able to save more as compared to people who were not doing well during the pandemic time. And what from the Islamic bank's perspective, or even from the conventional bank's perspective, we are experiencing a phenomena which is now has been termed as VUCA, like it's volatile, uncertain, complex, and ambiguous environment. And the most challenging factors, there was a very good survey which was conducted globally. And what was that? Like the surveys basically from the banking sector, both conventional and Islamic, and they actually gave these statistics. So if you look at them, the relevant for the Islamic digital banking is that competition from new age players, 66% of them, they said that like we feel a threat that we are going to face a competition from new age players. Again, 34% of them, they say that like technology as advancement and adoption is a big challenge for us also. And similarly, 38% of them respondents, they also say that evolving customer behavior is also very, very important. I think that Dr. Ahmed Naimi, what he has talked about is very relevant to this point, that now customer behavior is evolving. We are having different kind of what do we call population segments. For example, some people are tech savvy, some people are technology migrants, tech native, and then we also have technoholics, for example. So these are actually the different kind of geographical dynamics and the population dynamics which the Islamic banks also have to tackle with. So then right now, what is the priorities of the whole banking sector? If you look at it, pre-COVID and post-COVID basically gives us a very stark difference between the two era. So for example, like pre-COVID, there was an approach of banks to be siloed. For example, like they were focusing on digital and branch banking. But after COVID, now they have said that we have to create some sort of experiences where you have digital first banking, fully digital capabilities with, for example, like platform based approach first, API first approach also. So these kind of approaches now are being integrated in the banking sector. Second thing is about broken customer journeys. So for example, like previously what happened is like some part of the processes, services or products for the customer were digital and some of them were not digital. So like within the process, there was a mix and match between the physical or manual processing and automated processing. But now banks are focusing on end-to-end digital journeys. Third thing is, for example, like previously they were product centric, like if you have a very good product, then it will be sold in the market. So digital development was also basically focusing on this approach. But right now what we are seeing is, because due to the changing behavior of the customer, we are seeing that the products are being customer centric. So like we are gathering the data surrounding the customers and the clienteles or a specific customer base, and then trying to have a product which is customer centric. Risk management frameworks based on credit scoring was the previous approach, but now what we are seeing is that rather than having risk management framework, we are also seeing that data-centric risk management systems over there, leveraging in-house and alternative data sources. And that is why I think the demand for data scientists is huge in the Islamic banking sector as well. We also see that on-site workforce with branch interaction was basically previously the norm, but due to social distancing and controlled movement restrictions, what we have seen is like remote workforce and reduced branch network was the way to go. And the competition between banks and a new age player was basically the approach, like you try to basically compete with the startups, with the fintechs, and also try to basically compete with your peers as well. But right now, what you are seeing is the competition not on the institutional level, rather it's an ecosystem competition. But the good thing about it is that like now Islamic banks, or be it conventional banks, they have adopted an approach of convergence rather than competition. So what they are doing is like more partnerships, more merger and acquisitions are happening at the moment right now. I will be talking about the merger M&As also in the next slides in the Islamic finance. But that is basically now the approach. The approach has been changed from the competition to the convergence and collaboration. And then previously it was business first mentality, that like we have to save the business because we have an obligation towards the shareholders. But right now, a larger picture of the whole, or I could say like a bigger picture of the whole scenario is emerging as institutions, organization, banks, financial institutions are also feeling their responsibility towards the whole society. So social responsible banking or vulnerable population support is also basically one of the targets for the banks. So right now, what I foresee is that like how this banking is getting evolved and what would be the future. So the way I see it like is that it will be an open access environment where products will, the focus from the products will be shifted towards the experience, like the customer experience. And the focus from the ownership will be shifted from having an ownership approach, like you need to have all this full suite of offerings on ownership. You will be basically having shared access. Third thing is, for example, like rather than either building something in-house or buying something for your own and then offering it to the customer, rather you would go for the partnerships and then collaborate with other players of the ecosystem and offer better services to the customers. And then again, as from the assets, now the focus has been shifted towards data, because data is basically now the key towards many products solutions. So in that sense, what you can see is like you can combine these mainly three broad factors, for example, efficient platform bank, sustainable growth, and customer centricity. And these are, when these are converging, then you have embedded finance, a large pool of data, and digital customer experience layer. And with that, I think that these three factors are basically contributing towards having banking 4.0. So that is basically right now the overall environment of the Islamic and conventional banking, digital banking sector. And then what we have seen, there are some short-term priorities and then long-term priorities. And some of them are internal capabilities, which the banks are focusing on to build. And some of them are external opportunities. For example, internal opportunities, which are short-term capabilities, which the banks need to focus on, are basically shift to cloud and scale API. So for example, having an agile method, which I think Dr. Ahmed Darwish has clearly explained very well. And then you need to have banking as a service platform. That is basically a priority for the short term. And then implementing a customer experience layer where digital front office solutions are being provided. So these are basically internal capabilities which the banks have to work on in the short term period. And similarly, there are some external opportunities there. For example, like create new products and services in collaboration with fintechs. This is again an important thing. And then derive financial inclusion, because there is a huge gap right now that there are more than 1 billion people which are unbanked. Excuse me. So there are financially exclusive population, which is huge. And the banks are basically trying to leverage upon this population so that like they can cater the need of this population. In the long term, we have again some internal capabilities, for example, mass production to mass customization. So you have to make a focus that like rather than having so many products, you can have only one killer product which can be customized according to the needs of the customer. And then with that, you can guarantee your success. And transform your branches as well into full-fledged on digital branches. So having, again, I think a previous speaker also have mentioned about that trust is basically the main issue at the moment, to have such kind of complete digital banks, because people would like to know that, like, whenever we are giving our money, so we would need to know that, like, there are people behind it, there is a brick and mortar building there, and then we can go somewhere to claim our money. So basically now, but this mentality and mindset, it has been changing so fast. So what we will see is like complete digital banks will be the way to go. And then in the long term, leveraging external opportunities, you will have identify the niche. So like, for example, I do not have to be as a bank, I do not have to be a one-stop shop. Rather, what I will do is, like, I will identify my niche, the area of expertise and strength, and only then I can basically see that, like, what can I contribute within the ecosystem itself. And then industrialization of innovation to capabilities and expand customer base and reduce cost is also very important factor. Because let me just tell you that when Dr. Ahmad Naimi was showing the video of PNC bank, I laughed on one point, because in the video it also showed that, like, when the person was withdrawing $1, so the person had to basically pay $3 fees for the withdrawal. So that was basically the cost inefficiency there. So what you can see is, like, it doesn't make any sense for me to basically pay $3 to withdraw $1. So, but then the thing is, like, of course it's a facility there, but it has to come to the level where it is commercially viable.
Yes.
So that was basically the cost reduction is a very, very important point there, which banks needs to prioritize. So with that understanding of the whole picture, now we can focus on the Islamic digital banking. But before that, let me just introduce what is the condition of the Islamic finance as well in the COVID era. So what we have seen, like previously, it was a double-digit growth in the total assets of Islamic finance. But in 2019 and 2020, it was not a good year, again, due to economic crisis, lockdowns, COVID. So there was zero growth. But it is expected that after now, the Islamic finance growth again is picking up the pace. And there is an estimation that with 5% CAGR annually, it will go on further in the next 5 years. So with that, what we are expecting is that, like, by the end of 2021, the growth will be 5.5%, and then 6.5%, 6.7, 7.2 in the subsequent years. And if you look at the whole picture at the moment right now, you will see that Islamic financial institutions, there are 1,462 Islamic financial institutions globally. And I bear this point in mind that most of them are banks, Islamic banks. So like 80%, I can say safely that they are, out of this figure, are Islamic banks. And then we have like insurance, takaful companies, and then fund management companies and other forms of financial institutions. But
Farouk,
most of them—
we got just 3 minutes left.
Okay.
So,
Okay, perfect. Thank you so much. So, so what we have seen is also that Islamic fintech investment and financial institutions consolidation, we have seen there was a huge investment in the which was $4.93 billion only in 2019 in the Islamic fintech space. So this is basically giving you a larger picture of what Islamic fintech space look like. Again, what you can see here in this whole picture, there are different categories. For example, alternative financing startups. You have challenger banking, but it's a very small segment. Right now, in the traditional Islamic finance industry, 80% are Islamic banks. But in this fintech, Islamic fintech landscape, only 3.8% are digital banks. So here, there's a huge opportunity there. And let me just quickly say that, okay, Islamic digital banking here is basically can provide wealth management services through robo-advisory, PFM, pensions, asset management, and then we can also have deposits and lending products in different ways by leveraging the technology itself. And then there is a huge opportunity for Islamic digital banks. Why? Because if you look at the deposits and borrowing and lending products, for example, so if you look at the adoption, it's quite moderate, but there is a very huge potential impact. So we need to basically leverage on big data, for example, and artificial intelligence, so that like we can offer products of deposit, borrowing and lending and treasury products in a better way. Although especially like in treasury, if you look at it, then the use of big data and artificial intelligence is very, very limited. So we need to basically have some measures in the Islamic banks to basically leverage on the treasury products and enhance the treasury products through big data and artificial intelligence. So let me just give you a very small example here that, okay, we have some Islamic digital banks, for example, Alif, Insha, Castrol, Medina. So these are basically the Islamic digital banks currently operating. And just to give you a small use case, Insha Bank, which was actually head office in Germany, was successful because they found their niche. What they did is like they successfully identified target underserved segment, which was Turkish population there. And then they basically offered them the solution, which were compliant to their faith and interest-free solutions. So what I see in the Islamic digital banking right now, that where it is heading towards, I would say that like we are going to see one form is Islamic banking as a service. So IBAS, I could say. So these are basically non-financial channels for banking products, white label solutions via APIs. And we can also see Islamic open banking, where API integration is used for larger data pools and highly customized solutions. And also there is one point which I think that is also a very good area where we have to look at is Islamic decentralized banking. For example, using blockchain technology, what we can do is like we can use smart contracts, tokenization, and coming up with the central banks digital currencies and NFTs, like non-fungible tokens for real-time objects. We can do the tokenization in a specific manner, in a decentralized manner. So what I can see is like Islamic decentralized finance or banking can offer payment solutions, lending and borrowing solutions, alternative savings, stable coins, and saving products. I think that in the discussion, I may be able to explain it if the audience are interested to know. With that, actually, thank you so much for listening, and this is the end of my presentation.
Thank you, Dr. Farouk. Actually, you have shed lights on some really important insights, and you have focused on the development of the this industry through the banking sector in general and the Islamic one. But we are keeping focusing on the Islamic finance also with Dr. Mohammad Shahid now. Dr. Mohammad Shahid actually will shed light on very important topic, which is how to innovate products, how to innovate solutions, how to innovate new and digital solutions that comply with Sharia and can be applied on the Islamic banks. So welcome you, Dr. Mohammad, and nice to have you with us today.
Thank you very, very much. Pleasure. Just first question, is my screen visible?
Yes, it is actually. It is good.
Perfect, perfect. نحمد ونصلي على رسول الكريم. الحمد لله رب العالمين. أما بعد أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. ربي اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقهوا قولي. Thank you very, very much for the invitation today. So first and foremost, I'd like to thank the Islamic Chamber of Commerce, Industry and Agriculture, and the Al Baraka Forum as well for the opportunity today and for bringing about all the people that are watching, and for the future people that will be watching on YouTube as well. So today I'm going to talk about innovation, and the importance of innovation, where we are today in terms of innovation, and the misnomer that large institutions cannot innovate. Large institutions, essentially, it is more the area of a startup or a smaller, agile, faster institution that can essentially bring about innovation, and large ones cannot. So let's see if that is true or not, and whether Islamic banks or large Islamic institutions can innovate or not. So over the years, most innovation initiatives essentially fail, and it's really frustrating. And because initially everyone is excited and everyone jumps into it, and a few years later they give up on that because the innovation initiatives fail, and they said that we tried but we couldn't. Then the option for them is essentially acquisition or a merger or buying a startup, and we're going to try to see what are the reasons for the same. This is essentially my business card. If you take a snapshot of it, you'll get my details. Moonshot Advisory, this is a new logo that we've just come up with. It essentially shows this astronaut, and we try to take moonshots essentially in terms of what we do. Moonshot Advisory is all about moonshot thinking and radical solutions to problems using disruptive technology. We try to aim for 10x thinking and 10x impact on problems, revolutionary change instead of just evolutionary change that is out there. So we're a boutique. We are in the MENA region is what we essentially focus on, although we have offices in a number of other countries, and we specialize on organizational renewal or digital transformation, Islamic finance solutions, future readiness, the term that the brother before me mentioned, VUCA. So how do you become ready in a VUCA world, essentially, providing end-to-end digital transformation solutions. So partner network is in Saudi Arabia, in Bahrain, in UAE, Germany, Romania, the Russian Federation. We do a lot of work there in Russian Federation, Latvia, Morocco, UK, and Canada. So I'll start off with the ayah from the Holy Quran. Allah Almighty says, and He found you lost and guided you. So the term innovation essentially is something which is within the DNA of Islamic, with DNA of Islam. It's not necessarily for institutions only, but it's Islam as well. So how is that? There's a hadith by the Holy Prophet Sallallahu Alaihi Wasallam, whereby he said that a person, if he remains in the same condition for 3 consecutive days, i.e. he doesn't move forward, doesn't add value to himself, but remains in the same situation for 3 days, he suffers a great loss. So even if we are winning and we have reached a goalpost, and we are ahead, we can't stand still. So Islam is all about constant progress. It's all about moving forward. It's all about adding value. What did Peter Drucker say? Peter Drucker essentially said that the business enterprise has only two essential functions. One is marketing, and the other one is innovation. Marketing and innovation is essentially what makes money, and everything else is a cost. Thomas Edison said that there is a better way to do it, find it. So to become a transformative innovator, one has to look further than the immediate problem. Push yourself and the team to seek input from outside the immediate circle and current location. Diversity, hire a diverse team, open up the innovation process to outsiders, observe how people in other industries have solved similar problems to our problems as well. Question our company, our industry, experiment. So experiment is a very, very important part to test alternative hypotheses and to persuade potential skeptics. So in terms of experimentations, it's very important to fail fast and fail forward. You have an idea, you test the hypothesis, fail fast, fail forward. The important point that I'm trying to make here, that transformative innovators do not stumble upon interesting ideas by pure chance. It's not just, I was asleep, I saw this idea, the great something stumbled upon me and we became a success. Instead,
Yes.
in organizations, senior leaders design and manage their organizations to increase exposure to a broader palette of problems, perspectives, concepts, technologies, and user experiences. And through that process, one is able to go about innovation. So next slide, why does innovation die? I'll just take 10 seconds for you to have a look at this. In organizations, why does innovation die? So essentially, complex structures, inertia, politics, all obstruct innovation at established institutions. Some consultants have recommended that the institution essentially focus on their core business while keep a watchful eye on the startups so they can snatch them up when the innovation begins to take off. Based on our work and our experience, research says that it is possible to keep that in-house as well. The right strategy. So 3 is very, very important component, which I will talk about shortly, but 3 very important components essentially is the right strategy, having the right systems or the dynamic capabilities within the organization, and the culture. Culture is something my colleague Ahmed Naimi touched upon as well, and I will, in the stuff that he spoke about, in addition to that, I will shed some light on. So the strategy, the system, and the culture can essentially enable even the most established firm to make innovation feasible. Now, so where have we seen examples of very large institutions essentially unable to, those who are ahead of the curve, but essentially are no longer with us? You know, we have examples of Xerox, we have example of Polaroid, we have example of Kodak, we have Nokia, we have BlackBerry, which is research in motion, we have, you know, Yahoo, and so many others as well, which at one point of time were leading the pack, but down the road, you know, somehow they missed the boat. So leaders in large corporations with Islamic banks essentially can enhance their innovation capacity by ensuring that they are crafting the right innovation strategy, that their innovation is not driven just by FOMO, by just or fear of missing out, but there is a concrete thought out of strategy. So strategy essentially is what is a goalpost, what leads us in terms of the actions that we are supposed to be taking.
Yes.
Furthermore, building those capabilities, that's innovation systems that aligns their talent, their processes, their structures, their behaviors with that strategy. Now, typically the rule of thumb for most institutions, and I've been doing banking for more than 20 years now, as a practitioner, as launching Islamic banks in about 7 different countries. I've seen this play out time and time again, that essentially some institutions, large institutions would say, call in a consultant. Okay, great, do that, get external help, but just tell them what is the best practices. For example, what is Apple doing? I want to do the same. And that doesn't essentially work. What worked for Apple, what worked for another large institution successful elsewhere, not necessarily works for you. You have a different level of, your organization has different systems within, your capabilities are essentially different. The DNA of the organization is different.
Yes.
And the last thing essentially was the culture part, that they did not have or should have innovation culture. So as the saying goes that culture eats strategy for breakfast, and essentially you could have the best system, you could have the best strategy, but if you don't have the right organization culture, nothing essentially works. It is just doomed for failure. And I've seen that also play out as well, that not focusing on the cultural aspect, how even being way ahead of the curve, having the right ideas and having investing tremendous amount of financial capital into technology, into platforms, into everything which is new and shiny, the result was disappointing. Anyway, so because of all of that, what do we see? We see that the average company lifespan on S&P 500 is just decreasing year on year. So if we see it, it used to be 60 years before, or that was the average lifespan, and it has come down to 20 years, come down to 15 years, and is actually going lower and lower. And why is this? The speed of change, disruption due to technology, and COVID has essentially exacerbated the seismic shifts that we essentially seen. It is ever more so difficult to stay on top. So the lifespan is essentially going down. So there's something I can quote, that as many as 88% of Fortune 500 companies have disappeared in our lifetime. 75% of the S&P 500 will disappear by 2025. And what is interesting is that 50% of those companies that are going to replace them have not been born as yet. So the startups, the small fintechs, are essentially that are going to take up and eat up those larger banks, if we were to take the banking example, essentially. So we see unbundling of financial institution, and COVID is just, has pushed that much faster and further, as discussed by my previous colleagues. So if we were to look at this chart, the 20 largest companies by market cap in 1989 versus 2021, we see that none of the companies from 1989 are on that. And what is interesting is we see a lot of tech companies out there, few in the financial services. Let me show you another slide. So here it is that which companies belong to the $1 trillion club. So here, what is interesting is that there are about 6 companies right now which are in the $1 trillion club, and there are a few others which are in the nearly there. Only Saudi Aramco and Berkshire Hathaway are the ones which are non-technology. Everything else is around technology. And Visa, which is one of the most technologically advanced companies year on year, Visa and MasterCard, that I was getting it here. But besides that, no other ones. Facebook was the fastest ones to reach the $1 trillion club. So far, the entire understanding before was, and this is pre-COVID thinking, and hopefully that is changing now, it has changed now, was that the battle between institutions, battle between banks was this large Islamic bank trying to battle another large Islamic bank. They always thought of it as a struggle between Godzilla and King Kong, that this is this epic battle that is going about. And they were worried about basis points traded among large pairs. That was a fight essentially. However, the enemy that was, or that is the enemy that is going to give, or is giving a death by 1,000 cuts. The number of hyper targeted offerings coming out by these small ones, which are essentially trying to engulf the larger ones out there. And what is also interesting is that the cost of starting a business has gone down significantly. If we see, unfortunately, within this region still is one of the most expensive places to start a business, but elsewhere in the world the chart is right there in front of you, at how cheap it is. Essentially from $5 million to 15 years ago, it has come down, to $5,000, and even smaller than that, just to start up a business. One thing I wanted to share with you, and I'll just speed up because I am cognizant of my time. I think I have 5 minutes remaining, is the speed of adoption, the pace at which adoption rate has increased to reach 50 million users. For example, iPhone apps, 1 billion in 9 months. Facebook, by any stretch of imagination, was a company which was acquired customers pretty fast, but WhatsApp just blew it out of the water. You look at Facebook Live, the Chewbacca's mom, 24 hours it took to reach 50 million views. So fintechs essentially are going to eat into banks' business. And bankers, which were once the kings of capital, may be dethroned by payment platforms. The clout of non-banking financial firms is essentially growing and making the balance sheets that bank used to support lending less valuable. Example, so we can take the example of Grab in Singapore or Gojek in Indonesia. Both started off as ride-hailing services, or Mercado Pago, which is essentially the financial arm of Latin America's largest e-commerce site. Their model of financial services starts by being a dominant provider of service that the customers use daily. And what happens is another example is Alipay. Alipay and WeChat in China, Ant Group, the financial offsprings of Alibaba, was born out of the fact that the shoppers flocking to Alibaba lacked a safe payment method. Alipay was initially just an escrow account to transfer money to sellers after buyers had received their goods, but it was soon launched as an app for mobile use. And in 2011, they introduced QR codes and whatnot. Another interesting stat that I'd like to give you, that Alipay, about Alipay's growth, that they had about $16 trillion in payments in 2019 and about 1 billion active customers. This is 25 times bigger, 25 times more than PayPal, which is the biggest online payment platform outside of China. And what is interesting here is that the business that they're trying to take in, their margins are greater than what the banks are essentially playing at, which is a core banking system, core financial services that they provide. So we see an unbundling of banks in the US. The same situation is in Europe as well. I will talk about how money is essentially pouring in. So first quarter of 2021, fintech companies raised about 2.8 billion across 614 deals. Credit to CBI Insights and to Capgemini for the reports, and to HBS as well, Harvard Business School review. So VCs are essentially, pouring in money. The incumbent banks are also responding. We see that they're launching the digital consumer banking. For example, JP Morgan Chase is doing that. They're using Laurel Road launches the digital bank for doctors. However, although banks have bots with some level of artificial intelligence, the customer experience is still not there. The whole notion of customer experience of the banks is so critical right now. They have challenges like being security, you have other challenges out there like being bulletproof, but consumers don't care about constraints. They just want to have a similar great experience, what they are used to in the other tech-based institutions out there. So far, in terms of the level of service, I would say banks are still underwhelming. There's nothing that you see that overwhelms you there at the moment, not that I've come across, especially in the region.
We got just 2 minutes, please, Dr. Mohammad. I'm sorry for that.
Okay, I will quickly pass.
I know that you are speeding up.
Challenger.
Thank you. Yeah.
State of fintech is, in terms of China's and financial, Alibaba. So what are they doing? Great user experience, transparency of products, digitally native, profitable. We are seeing another interesting phenomena that API-based banking software is continuing to mature amid demand for digital experiences. These are the summary of the findings. I'll just keep this on for 5 seconds. You can read it later on. So trends for 2021, banking as a service, DeFi, decentralized finance, definitely is a big trend. But just to give you an example of just what I wanted to say before as well. It's faster for me to drive from Bahrain all the way to Dubai. It takes me 11 hours if I were to drive, or it's faster from driving from Oman to Dubai than it is for me to send money. It still takes, a longer time than that.
Yeah.
Another future trend is central bank digital currency, embedded finance, B2B, fintech, open banking. All of these are future trends. Now, just quickly, I want to talk about three things which are they should focus on. Mostly large institutions focus on their core business. They get decent and moonshots. They should spend 70% of their resources into core, 20% to adjacent, and 10% to those moonshot opportunities out there. The job of a leadership is essentially to ensure that they have the right innovation strategy, they design the right systems, innovation systems, the dynamic capabilities that are important for the organization, essentially, to ensure that they meet the strategy and then create that innovative culture. I will skip the innovation landscape map, and I will just go to the piece which I really want to talk about, the cultural part. Everyone wants an organization which has tolerance for failure, that is willing to experiment, that is collaborative, that has freedom to speak up, that is flat. But also what is it's important when they have tolerance for failure, that there is an intolerance for incompetence. So that should not be there. But unfortunately, when we want a tolerance of failure, we expect that there will be tolerance for incompetence as well. That's willingness to experiment. Yes, there should be, but it should be highly disciplined. It should be collaborative, but there is always an individual accountability. There should be freedom to speak up, but it should be brutally frank as well. It should be flat, but organizations are not built by consensus. They should have a very strong leadership at the top. So innovative performance is rooted in the combination of strategy, organizational systems, and culture. All are shaped by leadership. And future, Allah knows best. Always prepare for the worst and expect the best.
Inshallah. Thank you very much. Thank you, Dr. Mohammad, for this actually informative and up-to-date presentation. Actually, I hate that this webinar is coming to the end, but we are running out of time. Actually, it's really good, and I appreciate having you with us today, all of you. But we have just one question to end up. This question comes from Dr. Othman from Algeria. He says that how digital identity and e-key rules can enhance digital transformation and financial inclusion for marginalized groups. So anyone may have an answer to the question, you can share with us, please.
Could you just repeat that? Sorry, your voice was a little bit.
Okay. How digital identity and e-key rules can enhance digital transformation and financial inclusion for marginalized group.
If I can just add quickly on that, and then perhaps
sure.
like other respected speakers can also jump in. What I have seen from my experience, by the way, like I am advising one of the project, which is about digital eKYC identity for Rohingya people, which are displaced refugees in different countries. So for them, like I am advising the project, and what they are doing is like they are using blockchain, number one, and they are also using mobile devices, for example, to do the eKYC. How they are doing it, for example, they do not have any data for the citizenship of those people because they are refugees, they are just people. So what they can do is like, if let's suppose that somebody is speaking Rohingya language, and then he can also tell, it can basically, the program can also catch the dialect of the language, so that like it can know that like if he says that like I am from the south part, but he is having a dialect of the north, then it's something different. So then there will be something catchy. And then there are some other qualitative measures, so that like we can confirm that, okay, this person was born in that village, he was the son of this guy, and he has how many siblings, for example. So this, why it is important to have this kind of database, so that like the whole community which is not in their country, outside their country, can have access to financial services, access to educational and health services. So it's not only about financial inclusion, but inclusion to the mainstream society. So I think that it is, but the first thing is like to have that eKYC there, and to have that these kind of measures for digital identity. Only then they will be able to have access to the mainstream financial services. I think that other respected speakers can also add on to that, inshallah.
Okay. We will have, there's another question. Yes, Dr. Mohammed, please.
Okay, I'll just keep it 10 seconds only. So just to add
Yes,
that
sure.
For our region, we still have an issue of financial inclusion and underbanked population here in this part of the world here too, although we are much advanced in terms of other developing countries, but this problem still persists here. So when we were launching the first Islamic digital bank, that was the whole idea, that the ability for people, and this is about talking about 2014, to use their ID cards, their Iqama, essentially, just to be able to come online and verify to the other party, which is the bank, that yes, I am that person, and using that, which is connected to the database, to confirm that they're the person and open a bank account. So that has led to the penetration much higher than earlier on.
Yeah, that's great. Thank you. Thank you all.
Ibrahim, can just add one sentence, because maybe the case in case A is different. We have been approached by the central bank here, trying to work with the digital identity to welcome customers to open accounts. There is still some security aspects or concerns from banks about using the digital identity. However, eKYC is still going on, but with another trusted source of data. So maybe not the digital identity itself, but trusted partners from National Information Center, or some other trusted services coming from official entities in Saudi Arabia. So we can trust as a bank to use for customer KYC and opening accounts and giving them the services.
Yeah.
Thank you so much.
Also, we have for you, Dr. Ahmed, another question from Mr. Khalid. He wants to know about how to reduce the risks of the digital banking in agri-financing. Please make it in quick, please.
Okay, for sure. We have some first of all, credit risk assessment. Secondly, we are using some digital signatures in order to make sure that the customer is the one agree on this contract and he is approving this. Also, in some of our financing products, we are using a promissory note, which is now also officially available from the Ministry of Law. So we can also, or Justice. So we can also use some integration and available services to protect ourselves against these risks. I'm not specialized in agriculture in specific, but it's a use case similar to what we are using here in retail and corporate banking.
Okay, thank you very much. I would like to remind you all that this webinar was streamed and recorded on YouTube, so you can all refer to again and again. It was actually very helpful. I got a lot of comments that some people told us that this webinar actually is very wonderful. For all people joining today, we will have another session next month about women empowerment in partnership with UN Women in Pakistan. Don't forget to follow us on our social media platforms to know all the details of our next sessions and themes. I hate to end this webinar actually, but it's now coming to the end. Thank you very much for you all, and see you again, inshallah. Thank you, Dr. Farouk. Thank you, Dr. Ahmed. Thank you, Dr. Mohammed.
Yes,
Thank you, gentlemen.
Thank you very much. Thank you very much. Thank you. Bye bye all. Assalamu alaikum.